So extremely powerful formations playing out across the board, correct? Okie dokie, what is S&P doing this morning? Let's take a look. How predictable. This is where S&P collapsed from after the trading room close. Reminding you, if you know where these levels are, you know what not to enter into. And as it happens to be, Miss Yellen starts speaking in 30 minutes. And as it happens to be, this time S&P could not be more clear, showing incredibly powerful potential blasting through this level. Nevertheless, it means absolutely nothing, because we know what happens if you're acquiring a position into this level. Bullish rally way overextended. This bullish rally is getting ready to start finding sellers. The smartest thing S&P trader can do this morning is to take a morning off. You do not want to trade S&P when Yellen is speaking. You do not want to acquire long position into the end of the minor trend spelled out by the price since last Friday. And that's exactly the reason why we're staying out. Until I see powerful selling pressure on S&P, I know better not to touch it. This is the most important level in the market, and this is picture perfect example how essential it is to know Fibonacci levels. Because if you do, you know what not to enter into, and you know where to take profits off the table. And that's precisely the morning that I can't wait for Fibonacci Bootcamp, because this would be the kind of morning where we say, ciao capao, I'll see you at 10:30, because we know that S&P is not tradable at these levels, and S&P is not tradable until Yellen is done speaking. Bullish trend overextended, time for sellers to step in before we can start treating it with respect. Oil also reminded you, after that marvelous long rally had ended, how essential it is to respect the end of the minor trend. This is where sellers stepped in, and we know extremely well that sellers are incredibly tired. If you remember yesterday, I could not be more clear. Yesterday my bias was only long. This is where we were, and this is where I posted on Fibonacci forum and social media. I will only respect long-term bullish trend if it will break through this level. Otherwise, treat it as bullish correction only. And that's exactly what played out. Buyers were not able to break through this level, especially when it correlates with the end of the minor trend on hourly. Sellers stepped in, and guess what? Currently my bias is bullish, because we know better. Sellers are incredibly tired on oil, and buyers are incredibly tired on S&P. Currently my bias is bullish on oil, and my bias is stay out of S&P until we'll see a powerful selling pressure, until Yellen is done speaking. I ain't touching S&P, and S&P could not be more clear. It's showing incredibly powerful potential for breaking through this level. But the wise trader knows it's ain't touchable, it's ain't tradable, because combination of decision point 1 on hourly and reversal zone on daily telling me bullish trend is getting ready to take a very major pause at any moment. So the smartest thing, staying out of S&P until Yellen done with her speech.